Hi, everyone. My name's Mirchandani, and our webinar today is on how to consider biodiversity in portfolios. I'll also give a example of an investment that we think is nature positive. My colleague James is in the background moderating and making everything work. So if you have any questions, please feel free to email him on james@elmri.com. Or if you have questions or have any technical issues, you can use the Q&A button at the top as well. If we don't get through the questions today at the end of the webinar, we'll get back to each of you with answers afterwards, later today or tomorrow. I just really wanted to thank everyone for tuning in today. I know everyone's busy throughout the day, but also there's been a lot of sadness, especially over the last couple of weeks with the terrorist attacks in Israel and the ongoing war in Gaza and the suffering of innocent children and women and civilians, which is truly devastating and incredibly sad. And also the results of the referendum over the weekend was just another blow. And so I think a lot of people are feeling the effects this week. And so I understand that biodiversity, particularly in investing, may not be front of mind for everyone, and has possibly taken a back seat. But it is an important issue, so thank you for joining us. I'd also like to acknowledge that we're recording this webinar from the lands of the Wurundjeri people. I acknowledge the traditional custodians of the various lands on which you all work today, and Aboriginal and Torres Strait Islander people participating in this webinar. I'm the founder of ELM Responsible Investments, and just a big thank you again. So here we go. Here's the standard disclaimer that we have to put up there. I thought I'd start off with this slide. I came across this notion of Earth Overshoot Day recently, and it's a measure of the ecological footprint, humanity's ecological footprint, and how long it takes for us to get through the planet's biocapacity throughout the year. So you can see in 1971, it took us about pretty much until the end of the year before we exhausted that year's biocapacity. But as the years went on and to 2023, it's happening a lot earlier in the year. So in 2023, we exhausted the planet's biocapacity on August 2nd, I think. So that's just showing how much pressure that we continue to put on our planet. And I would highlight, though, that it might not be relevant to compare the exact date in 2023 compared to 1971 and over time, because assumptions would have changed. So so I think the thing to take away from this slide is the trend. So what is ELM Responsible Investments, and who are we? We are an investment fund manager focused on investing in sustainable and impactful companies, but still with a focus on delivering shareholder returns. We run two funds, the Global Fund and the Australian New Zealand Fund. Both funds are similar in nature in that they're both concentrated funds, and the time frame for investors is typically 5+ years, so quite a long-term investment strategy. We don't trade in and out of holdings much at all, and so we're a high conviction fund manager, and the idea is that we invest in our best ideas and we hold on to them for a really long time. We think that that's the best way to deliver returns for our clients, but also that long-term mindset we think really helps in delivering social environmental outcomes. The way we think about companies is that, we're really focused on companies that are innovative, that are driving positive change and delivering positive and strong returns. We think that, innovation and positive change goes hand in hand. Without innovation, we're not going to get the positive change that we need. If we keep investing in the same types of companies that have existed over the last, 10, 20, 30 years, 40 years, we're going to get the same outcomes. So we're really looking for companies that are making a material difference. And with that, in order to do that, we need innovation. As I said, we're focused on impactful companies that are making a difference. And in order to identify those companies, we've got a sustainability framework that we follow, focused on positive contributions to the United Nations Sustainable Development Goals. And we've got a process that helps us measure and identify the impact. Investor returns is also obviously really, really important. And so we've got a investment framework that helps us look for high quality, sustainable growth companies. And we invest in companies that are both. Our process in a bit more detail. I won't go through the steps in each of the steps, but you can see that, in the company research process that you can see in the gold, we conduct thorough investment analysis, industry research, and think about the investment returns and the risks associated with that. We run DCF valuations and really think about positive skew as well. So, we're looking for companies that have the potential for greater upside potential than downside risk. And we're constantly trying to optimize for risk, return, and skew. Our sustainability research is focused on looking for companies that are most impactful and delivering on the United Nations Sustainable Development Goals, as I said. But we do that by leaning or borrowing the process developed by the Impact Management Project that enables us to analyze and quantify the levels of impact that a company is delivering for all its stakeholders. And the goal there is to skew the portfolio towards companies that are most impactful. And from I should say, it's just in the same way that we're trying to optimize for risk and return on the investment process side, we're trying to maximize the impact that we can deliver in our portfolios. So when we follow the process, our process, we can identify a few trends or themes and find areas that are fruitful for investing. The first area is in what we call environment and climate change, and the idea of biochemistry, biodiversity fits into this theme. Climate change is obviously another theme that sits within that as well. Where we also find a lot of opportunities in healthcare, in the digitization of economies, and sustainable housing and building products. But today's discussion is on biodiversity, and so we'll delve deeper into that. You may not know, but this is a really big problem that the world faces. According to the World Economic Forum 2023 Global Risks Report, loss of nature and biodiversity was the fourth most significant risk for us all. The other three were related to climate change, I believe. So this is a really big problem. But as investors, when we're thinking about how to invest in this space, it becomes a little bit more complicated. If we want to invest in climate change, there are a lot of examples where a lot of funds and options where you have investments in companies that are either taking carbon away from the environment or developing renewable energy projects. But when I did a quick Google search of biodiversity investment options, the first one that came up was an ETF with big holdings in Tesla, MasterCard, Visa, Nvidia, Broadcom, Home Depot, and United Health. They're decent companies in there, but to be honest, I'm not sure how MasterCard or Visa or Home Depot is really targeting biodiversity and solving that problem. I would assume that these strategies that are out there are simply managing the biodiversity risk. So perhaps a company like MasterCard or Visa are good corporate citizens and doing the right thing to minimize their negative impact on biodiversity. So I think there are a lot of strategies and options out there that are minimizing risk, but it's a bit more complicated and difficult to find companies and options that are specifically targeting solutions to this problem. What we try to do is, we try to target for solutions and look for companies that are potentially going to drive positive change and shareholder returns. And so in order to do that, we went off and looked for the drivers of the nature crisis. And the United Nations came up with 5 reasons or 5 drivers of this crisis. The first one being invasive species. The second one, agriculture and development. Third is pollution. Fourth is climate change. And the fifth is natural resource exploitation. And so I think as investors, if we look for companies and projects that are addressing each of these 5 areas, then we think that you can get to a better outcome. So firstly, on climate change, what investors can do is we can invest in renewable energy and invest in technologies that are helping take either carbon out of the environment or helping progress the usage of renewable energy, such as in battery technologies, for example, and obviously avoid investments in a fossil fuel. If we want to target natural resource exploitation, we can invest in recycling technology and alternative options, and avoid unnecessary exploitation of natural resources. And I would include the mining of iron ore in that camp. I know there are other sustainable and ethical strategies that are investing in iron ore because it simply isn't fossil fuel. But for us, when we look at the entire value chain and think about how iron ore is used, we would question the continual mining of it. And it's quite a timely discussion to have because Rio Tinto has been progressing with the development of their Simandou mine in Guinea. So this is a screenshot of the area that they're proposing to mine. It's an incredibly it's home to many endangered species, including many endangered chimpanzees, and home to a lot of a diverse range of both flora and fauna. But what sits underneath is one of the most rich and biggest iron ore deposit in the world. And there's been a lot of controversy around this mine over the last, decades. But when we think about what if that mine like that is to proceed, then and we think about, okay, what is the end outcome of it? Well, iron ore ultimately goes into steel production, which is 11% of all CO2 emissions, according to Carbon Brief. So not only are we going to be destroying this beautiful place in Simandou, it's also the product itself is going into the process of emitting CO2. Now, most of that iron ore, or most of seaborne iron ore, goes to China, where they make where they make steel. And yes, we do need steel for economic growth and development. But the way they make steel is much more carbon intensive than the rest of the world. If we think about that, we go, well, why is the Chinese process much more carbon intensive? Well, it's primarily because they rely on a certain methodology to make their steel, which is much more carbon intensive and relies on virgin iron ore. Many other parts of the world use a different methodology, which is much more much less carbon intensive and relies much more on recycled steel. We can see that China recycles 20% of its steel, whereas the rest of the world recycles about 60%. So from our perspective, when we think about this industry, we would prefer to invest in recycling technology as opposed to investing in virgin iron ore mines. And if we do that, we think that we can save, close to 1.8 tons of CO2 for every ton of scrap steel that's recycled. And I know there are nuances and complexities associated with steel recycling, but our goal is to direct capital towards the most impactful areas, and that's where we're looking at. By promoting recycling, we think that you can not only limit the carbon emissions, but you can also limit the destruction of mines or areas like the image you saw before of Simandou in Africa. Agriculture and development is another area that the UN's raised as being a key driver of nature loss. And so as investors, what we can do is invest in alternative proteins, sustainable agriculture and development, and decrease the usage of harmful products. So any way in which we can decrease the usage of harmful pesticide, herbicide, and the like, we we would welcome. Pollution, again, we can invest in recovery and recycling of harmful products, and invest in biodegradable and other alternatives, and obviously decrease the usage of harmful products, primarily, again, fossil fuel products. And so there's a real theme here, I think, where it's a lot about investing in recycling technology, and alternative technologies that provide a much more sustainable and and I guess environmentally friendly solutions. And so when we tie that into the exact investment opportunities, we look around the world, and there are many opportunities out there. Here's a few that some we're currently invested in, some we've been investors in the past, and others we're looking into investing. So I'll go through these companies quite quickly, and then focus in on one that we're really interested in and really excited about. So Tomra in the top left is a Norwegian recycling sorting technology, and so if they through their technology, we're able to increase the efficiency at recycling plants and direct the waste to the right place and treat the waste in the right way. And so then we can improve the outcomes and recycle more products, really. Sims Group, or Sims Metal Management, Australian listed company, with recycling plants primarily in the US, but around the world as well. They're big recyclers of steel in the US, which we spoke about the positive impact of that. John Deere is a household name, I guess, and we know them for their tractors and farming equipment, but it's interesting, they've got a precision agriculture technology which enables farmers to use less herbicide, less pesticide, and target exactly where they need to use those products. So as a result, farmers are able to use much less and have a much less impact on the environment, yet get the same outcomes or output. Danaher and Veralto, we're currently investors in them. They're big in they were the same company up until recently, but Veralto spun out of Danaher recently, and they're really focused on water quality testing. Neeb is another company that we're also investors in, and they're a Swedish heat pump company. And it's really cool what they're doing, where in Sweden, they've connected up a city where they're able to pump water from the residential area to the industrial area during the day, use the energy that's created in the industrial area of the cities, and then pump that hot water back to the residential area in the evenings, so that households can use the hot water when they get back from work. I won't go through all of them. I mean, Tesla's, we all know what they do. We're big investors in that as well, but I won't go through exactly what they do because I'm sure everyone knows about them. Infratil is also another holding of ours. They're developing big renewable energy projects around the world, and we're really excited about them because not only are they investing in the space, but they're investing really, really early on. So they've got a great track record of building up new renewable energy businesses and scaling that, getting it to a profitable state, getting those businesses to a profitable state, and in many cases then selling the unrisked assets to other financial buyers. And for them, their Infertil's renewable energy businesses generated over 30% return per annum over a number of years. And so, we continue to back that company. I'm going to talk in quite a bit of detail about Novozymes. They're a Danish biosolutions company that we've been doing quite a bit of work on and taking an interest in. Many years ago I used to cover a company called Novo Nordisk, and took an interest in them. Novozymes and Novo Nordisk came from the same company. The idea, biosolutions, is the method where are microbes, which are living organisms like fungi and bacteria, and also enzymes. So enzymes are proteins that help transform substances throughout nature. And so I bring in Novo Nordisk, which I think many of you might know already because they're now the largest European company in the world, or the largest European company. They make insulin, but the process of making insulin is very similar to the way Novozymes makes their product. It's all based on fermentation, based on microbes and enzymes. Beer is made in the same way, and so and people have been doing this for many years. But it's only, I guess, now that we are starting to really think about the opportunities of microbes and enzymes and what they can deliver for the planet. Novozymes is focused on 3 commitments using enzymes and microbes. The first commitment is to accelerate the world towards a climate neutral society. The second one is to transform the food systems. We know that agriculture is a big cause of biodiversity and nature loss. And so any way in which we can address that is going to be really helpful. And also, climate change is one of the drivers of biodiversity and nature loss as well. So that's, when we look at Novozymes, we think that they're addressing biodiversity in a really broad way, which is great. The third commitment they have is towards enabling healthier lives. So using microbes and enzymes in things like probiotics to enable healthier lives. For today's discussion, we're going to focus in on transforming food systems. So, agriculture is a key cause of biodiversity loss, which we need to understand and accept, but it's only going to get worse. So as the population grows, protein demand is also expected to increase as well. And already livestock accounts for 80% of the agricultural land. So, we can't, in order to feed the growing population, we can't just keep doing what we've been doing. We need to think of a different way and use solutions and technologies so that we can produce what we need to feed our population, but also decrease the impact we're having on the environment. And so how's Novozymes doing that? Well, the first way that they are addressing that is by using enzymes to improve the quality and texture of plant-based meat naturally. And so by using enzymes which they've researched and developed, they're able to make plant-based meat products much more appealing to the consumer. And the goal or idea is that if you make that more appealing, then more people will take it up and eat less real protein, I guess, or traditional protein. I've heard that this industry is a lot like the electric vehicle industry many years ago, where, say with traditional internal combustion engine vehicles, was obviously highly carbon intensive, but it was important for society, important for consumers to be able to get from point A to point B. But over time, primarily Tesla and other EV makers have been able to get the electric vehicle, to a place that's even better than the traditional internal combustion engine vehicles. The environmental footprint is less. It still allows you to get people from point A to point B. And also the experience of riding an electric vehicle now is much better than the experience of riding a internal combustion engine vehicle. And so, that's what we need to do with plant-based meat alternatives, is to make that experience much better for the consumer. Improving the texture, the taste is one way in which, is one important part in getting to that point. The added benefit with this too is that, it also has not just environmental benefits, but potentially health benefits as well. Food waste is also a big contributor to biodiversity loss. Every food that we don't waste, we don't have to grow. And so if we can extend the life of our food in a safe way without using additives, we think that's a positive, and that'll lead to decreased food waste. And if we think about food waste, you've got visible food waste, which happens, after your meal. So, think food scraps. How do we decrease that? But also you've got invisible food waste, which happens before that step in the food processing steps. So again, enzymes can be used to improve that process, to increase the yield of the food that we eat. Another way in which we can use enzymes to transform the food systems is that we can use enzymes to remove harsh chemicals that are needed in a lot of the foods that we eat. So margarine is an example where a lot of chemicals are used. But if we use enzymes, then we can skip many of the steps and not even use the chemicals that were traditionally needed, and still maintain the food quality and the texture of margarine. And by removing the harsh chemicals from the entire food processing process, that'll have a downstream impact on nature and biodiversity. Now, when we think about the sustainability and the impact side of Novozymes, you can see that it ticks a lot of boxes, and we're really excited about the opportunities there. But we think that also translates to good financial data and outcomes. So, but also the culture and the organization itself is one that we are aligned with. So, as I said earlier, Novozymes is also was part of Novo Nordisk many years ago, and then Novozymes spun off, I think, about 20 years ago. What that's meant was that Novo Holdings, which is a foundation, um, is a long-term shareholder in both Novo Nordisk and Novozymes. And by having the backing of a like-minded, values-oriented shareholder, helps a company like Novozymes deliver on the long-term objectives, not just financial, but also from a sustainability perspective. They're not a company that's focused on short-term and quarterly earnings releases. When investments are needed to be made, long-term investments are needed. They go ahead and make it, which is unlike many other companies where I think, that have become more focused on delivering short-term returns at the expense of long-term shareholder benefits. In 2022, revenue was 17.5 billion Danish kroner, which is an organic growth of 9%. Strong profit growth or EBIT margin, sorry, of 26%. And the measures that we look at are return on invested capital of 17.6%, which is decent. And then that translates to close to 30% return on equity. They're all, financially, they're all great metrics for a business. And what we like is that we like companies that are investing in research and development, and the company continues to invest 11% of revenues in research and development. And we think that you need to be investing today to deliver new products in the future that'll deliver shareholder value in the future, but also deliver new markets. So we think that the long-term opportunities is really interesting. There are new sectors and products that continue to be unlocked, and we think that there's about 100 billion Danish kroner, which is about $15 billion US of new opportunities out there. So some of an example of that new opportunity is using enzymes to create a more biodegradable packaging product. So we like that. The company recently acquired C.H. Hansen, which is another microbes and enzymes business. Interestingly enough, Novo Holdings is also a shareholder in C.H. Hansen. And so this deal has been supported by Novo Holdings. And this will create a $3.5 billion revenue company with synergies and to come over the years. And create a one-stop shop for natural chemical processes, which is focused on healthcare, environment, and agriculture. More recently, however, the revenue and outlook has disappointed the market. So there's been a lot of destocking going on, particularly in the consumer market, and being exposed to agriculture, they've experienced a lot of volatility in that space. Their costs have also disappointed because of the elevated levels of inflation. And that's meant that the stock price has declined quite significantly over the last couple of years. But we think that when you combine the culture and the long-term vision that the company has, and the where the company is positioned on the theme of sustainability more broadly, we think that the long-term opportunity is really, really exciting. So that's the end of the presentation and webinar. Just wanted to thank everyone again for your time. If you have any questions, you can email them to myself or James, and go from there. So thank you, everyone, and there'll be a recording that'll be sent out. And yeah, please reach out if you have any questions. Bye.